our show In Conversation. Joining us today is Captain Pappu Sastry, a dynamic and award-winning leader in global shipping and logistics. He is the CEO of Adhira Shipping and Logistics DMCC and Rainmakers Management and Consultancy in Dubai, with a proven track record in merger and acquisitions consultancy, strategic investments, and commodity logistics, especially across Africa and Asia. With over 2 decades of experience and multiple international recognitions to his name, Captain Sastry brings a deep, innovative perspective to both maritime and non-maritime ventures. Today, we'll explore the wider scope of his group's consultancy and investment initiatives beyond shipping and logistics. Could you tell us more about the kind of consultancy work your group companies are involved in?
We do mining logistics consultancy as our core business, and this has been going on for 2.5 years. Out of our experience, we have seen that there is a need for a management of the mergers and acquisitions. Most of our clients are junior mines, and these junior mines struggle at different stages with cash flows, and some of them don't have the full planning. They do get a mining permit or a mining license after doing a lot of exploration. So getting an exploration license is quite easy in most of the countries, and you can do the research. That will take about $500,000, $1 million and 3 years or so, and then you will come to a feasibility study. Then you get to mining license stage. So if your exploration license before you get to the mine costs you X, by the time you get to the mining permit, the cost goes up, or the price or the value goes up to 2X. And coming into production is the more important part, and most of the mining companies or the people who are doing the research on getting the mines and getting the mining license, they don't have the cash flow or the financing for coming into production. So at that stage, if we can get an investor, we found that coming into production will take about a year, but the value goes up from 2X to 10X just because you are in production. And the value of the mine is the value of the company, and the investors see it as an opportunity to help with the cash flow. Some people come in at a stage when it is exploration, some people come in at the mining permit stage, because a lot of them are uncertain about Africa and they want some hand holding. So we also focus on getting them the market entry into Africa for the sake of getting to the level where they want, they have a comfort. They are able to invest in something that has a mining license, government approved, and they know that all they have to do is put down the infrastructure and come to production. The investment can be quite substantial in some cases because of the logistics that is required. The infrastructure is almost always lacking. So different commodities have different types of needs, and what we try to do, and we saw this as a niche need that is there with almost all our clients who suffer with cash flow, and then we suffer along with them. So we found that if we do a M&A consultancy, we are able to sell mines at least partly or fully, joint ventures or just investments or financing or even takeovers. Then the investors are looking for an exit at some point, and they can see the return on investment coming very quickly. And in Africa, there are plenty of mines, there are plenty of commodities. You are able to go from West Africa, you say Guinea or Sierra Leone, going down to South Africa. So most of the commodities that we handle are bauxite, iron ore, manganese. We do have a lot of gold projects which don't require logistics, so I don't show more interest in them. But there is lithium and copper. So lithium is in demand, but the price is down. So then this is the best time to enter. Copper is there in demand, but not many mining licenses available. In South Africa, you can get a few of them, which are quite good. The reserves are proven, and you actually have people who do not have the knowledge to approach international markets. So we try to bridge that gap, and in that we do the formatting. We help them to create the data room. We present it the right way that the investors need it, and we're doing that as a separate business now, only because we see our involvement will mean, first of all, that to sustain the cost of doing it, we just need one deal a year. It gives a good return. We possibly, I would say, we will possibly get logistics, but then we can't guarantee that. But that is our end goal. So if we are making these junior mines come to production with investors, and they come in with capital, they will require logistics, and we are there for doing that. So to that end goal, instead of waiting for the junior mines to raise their own finance, we are helping them to raise the finance and get to that production.
You're providing a very important link. It's very impressive range of services as well. So when you mention merger and acquisition consultancy for the mining and oil and gas sectors, what is the value that you add?
See, like I said, most of the mining consultancy, mining mergers and acquisitions consultancy is because the companies which have the mines do not have the aptitude sometimes, and I'm not saying all of them, but there is a small niche that requires the service. And we do have people who are interested in getting mines, but they don't know anything about mining. So we have a team of people who are geologists and mining experts who actually can put together the whole structure. They can validate it. We use proper consultants. Actually, again, we are only doing contract management. So our value addition is by being either on the seller side or on the buyer side. We do not want a conflict. So we don't do the feasibility studies ourselves. We are not even qualified to do that. So there are very good professional companies which do the feasibility studies of a mine that is already there. And all mines, actually, there is a standard, like in Canada, the standard accepted is called 43101. In Australia, it is called the JOC report. Indonesians also like the word JOC. And once that report is there, then the reserves are proven. You don't have to you don't have to redo the due diligence. So then most of the due diligence is related only to regulatory and whether the ownership of the mine is actually with the selling company. So those kind of attributes are what we are trying to address, and we either take the side of the seller or the buyer and try to bridge the gap in the knowledge between them. For oil and gas, when you say there are a huge amount of a lot of requirement of storage tanks coming up in ports in West Africa, mostly for clean product. And there are projects all over West Africa coming down all the way down to South Africa, and along that coast, at least I can give you 6 ports which require storage tanks. Storage tanks, to build 50,000 tons of storage tanks, it will cost you $1 billion, and it will go up to 2 or 3 years of work. And normally EPC contractors are not able to raise finance on that on the basis of just government or private companies in the African countries giving a guarantee. That is not good enough for finances. So in one structure, what we did was, instead of doing a storage tank ashore, we did a storage tanker outside at sea. So it can be moved, it can be chartered, it can just be a storage tanker of 50,000 tons, which you can start within 2 months. We set up the whole storage tank and the supporting vessels, the smaller vessels going up the river, and then they supply to a small jetty. Instead of building a big jetty with a lot of infrastructure, we go to a small jetty, and with a hose we go into tank containers which hold the cargo for the sake of loading onto trucks that goes interior. So that whole structure we could put together in $500,000 within 2 months, instead of doing $2 billion or $1 billion, the quotations that happened with a lead time of 2 to 3 years.
What type of investors typically approach you, and what should they expect when working with your group, in addition to what you've already told us?
The type of investors are normally people who are either involved in mining or in commodity or trades, or people who are end users of the commodity. So smelters in China are the ones who are owning bauxite mines in Guinea because it makes sense for them. So there are not many smelters in India, for example. You have 3 or 4 smelters, and they also are in Guinea trying to look for business. You will have steel plants in China who are looking for iron ore projects in Africa. You will have nickel smelters looking for nickel ore. you will have end users mainly, like lithium battery manufacturers looking for lithium. Crushed lithium is like $20-30 at the mine, and once you refine it, the value goes up to $1,200 a ton. And that refining process, the infrastructure required is only $3 to $4 million. So investors whom we bring in are normally either aware of the commodity or aware of the country or aware of the trade, and they either are the end users themselves or they are just aware of mining. They don't know anything else. They have mines elsewhere in the world. We have Canadian stock exchange companies who have Canadian assets. We have Australian stock exchange companies who just know mines, and they are even stock listed. They do have the mines, they are stock listed, but they have not come to production anywhere. And because of various reasons, normally it is the logistics cost or the labor cost. Having a lithium mine in Canada, which is covered 6 months with heavy snow, is not going to come into production in the near future. But they do have a listed entity with which they do have mine owning. Now they want to get into Africa for the sake of having similar lithium mines, which can actually come into production. So we bridge the gap on people who are aware of one part of it. We are not finance consultants. We are not soliciting finance for something that is not workable. We want them to have some knowledge, but they also need, we generally find that they need us for the sake of entering a particular country, managing the government regulations, the rules and the labor laws, for example, in South Africa, and then coming into production, they want a plan, and we make the whole financial plan and the costing for them. Because they are not aware of the costing in that particular country.
That's a very extensive group of people.
Yeah, the extensive group of people we have are 4.
So what responsibilities does your group take on, and how do you ensure quality and accountability across the projects?
See, again, accountability and continuity and instant expertise is the only USP that we market. If somebody wants to get into a mining commodity owning or mining venture in Africa, what normally they do is they go and find a CEO of another mining company in another country and different commodity and ask him to come in. They go and buy, and then they will put a CEO who will try to manage everything. They are reinventing the wheel. So in that, there are a lot of people who fail, and they learn from their mistakes, some of them. Some of them are not around to learn from their mistakes, so they just go away. And some people just blame it on Africa, which is also not fair. Africa is a land of opportunities, if you ask me. And we are there, we are trying to bridge this, and we do know that not everybody wants every part of our service. But when we are talking to somebody, we normally are saying 2 things. One is we are an extension of their office. If they would have had employees, what they would have done is exactly what we are doing. But they don't have to have employees. And we are not charging them more than what their employees would have costed them. Some people will still have the employees and still have us as consultants. That is also all right. In general, what we try to do is we don't compete on price, and we don't compete against price-based model that they have. What happens then is that you are working for the least amount of money, but doing exactly the same thing. The USP that we have is for every logistics and every mining consultancy, every format, what we have is a SOP. We have minimum standards. We tell the client that these are the minimum standards that we are going to follow. Again, when I say we are only 4 people in one M&A consultancy and handling 15 or 20 projects, that is basically, these are projects in the pipeline. So, like I said, 1 project a year is good enough for me to cover these costs. So, what we do is put the systems down, and we do exactly what they would have had if their employees were there. So, accountability is better because we will not leave. We have a company which can sign a contract which can stay there for 10 years. We do have a few 10-year contracts on logistics, and we are only doing contract management. No part of the business is actually executed by us. We are executing on behalf of the clients, and we are executing on their name most of the time. So we don't have assets, we don't have conflicts. We also don't do the feasibility like I told you, because that will create a conflict as well. So when we do the feasibility, there are cases where we do the feasibility, but then we are not doing any other part of the business for them. So like, again, accountability is a big word, right? So I just ask them to compare the accountability of their employees to our accountability, and the expertise that they require are already there. So they don't have to look for new people. Irrespective, we do have a few people who try to reinvent the wheel, and there is no harm in it. Some people do come back to us as well after they fail, which is also fine, as long as they acknowledge that. And we do have a lot of people who learn from us and go and do it themselves, which is also perfectly all right. When we are not trying to hold on to anybody for a long term, but our business model is such that we don't take the risk of putting down money on their assets, and we are basically doing a service, so we continue to be a service provider rather than anything else.
And apart from consultancy, what other services does your group provide?
So in general, Rainmakers is the company that is providing the consultancy, and we do consultancy on a different level, in the sense it's very niche. It's not something that everybody does. We have got our experience in Africa by being there for 15 years. I have a team of people who have all been in Africa. They all know various countries. There are people who come to us with, say for example, we have requirements. People come to us and say, okay, I have an iron ore mine in Guinea. I have an iron ore mine in Congo, or I have to try and do a business in Botswana, gold. And if we are not able to do it, we will tell them we are as good as anybody else. So you can actually ask us to do it. We will do our best with the knowledge that we have from another country. Like I always keep saying, Africa is not just one country. Every country is different, every culture is different. We have to be very aware that just because you're good in one country, you're not good in another. But that said, we do have operations now in about 8 countries, and we don't want to expand continuously into new countries. We want to do more in the countries that we are already in.
So thank you so much. Those are all the questions, and thank you so much for sharing your insight, your expertise and your time. It was such a pleasure having you.
Yeah, thank you very much.